The Dow, S&P 500 and Nasdaq just got hammered. All three closed in the red. And you know why? Iran's supreme leader just made a statement about enriched uranium that sent every trader's risk alarm screaming. This is the kind of moment where markets don't think. They just run. Welcome back to TechMeHome, MarketPhase Daily News. I'm your host, and today we're breaking down exactly what happened, why it matters to your 401k, and, most importantly, where the smart money is hiding right now. Let me paint you a picture. You're a portfolio manager at a major hedge fund. You've got billions riding on the assumption that the Middle East stays relatively calm. Geopolitical uncertainty is fine in theory, but when Iran starts publicly talking about uranium enrichment, suddenly that assumption feels like a house of cards in a hurricane. Investors rotated hard into defensive positioning today. That's finance speak for we're scared, so we're selling growth stocks and buying bonds and gold. The risk premium, that extra return investors demand for taking on risky assets, just spiked. Think of it like a casino blackjack table. When the dealer's hand looks strong, you stop betting big and pull back to the minimum bet. That's what happened today. Here's what you need to understand about geopolitical risk. It's invisible until it's not. The Middle East has been tense for decades, but uranium enrichment specifically? That's a credible signal that something tangible might happen. And markets hate tangible bad things. They can price in a 2% decline. They can't price in a 30% collapse if war breaks out and oil spikes to $200 a barrel. So they just sell across the board indiscriminately. Now, before we go further, let me tell you how to actually protect yourself against moments like this. So here's where it gets interesting. Not everything fell today. In fact, some sectors absolutely crushed it. And that tells us something crucial about where money is flowing right now. New Holdings, the Fintech giant, just reported record Q1 revenue, over $5 billion, with $871 million in net income. That's not a typo. The margins on digital financial services in Latin America are absolutely insane, and investors are taking notice. Even in a geopolitical risk-off environment, fintech growth in emerging markets is still getting bid up. Why? Because a financial crisis in the Middle East doesn't kill lending in Brazil. Healthcare was another big winner. United Health and Humana both outperformed. Managed care stocks gained as margins improved. Here's why this matters. When the world gets scary, people don't stop needing doctors. Healthcare is recession-resistant. It's defensive. It's boring. And right now, boring is beautiful. But here's where it gets weird. Semiconductors and AI stocks also held up okay. Why? Because Nvidia just reported blockbuster earnings, and the AI infrastructure thesis is so strong right now that even geopolitical headwinds can't kill it. GPU demand is inelastic. Companies are committed to AI, and they're not pulling back on chip orders because Iran enriched uranium. Bitcoin miners rallied on Nvidia strength too, which tells you the crypto crowd is still convinced that AI infrastructure is the future. This is a classic mixed market. Fear selling in traditional equities, flight to gold and defensive healthcare, but conviction in structural growth stories like AI semiconductors and fintech. The Dow fell. The S&P 500 fell. The Nasdaq fell, but not as much. That's a bifurcated market, and bifurcated markets are dangerous because they breed overconfidence. Some investors think semiconductors are safe. Some think geopolitical risk is overstated. Some are convinced that by next week this whole thing will blow over, and they might be right. But they might also be wrong. Here's what I'm watching. If this Iran situation escalates and geopolitical premiums stay elevated, you're going to see three things happen. First, gold and precious metals keep rallying. Kerr Mining just posted record Q1 results with $856 million in revenue. That's because gold and silver prices are up, and when the world gets uncertain, investors buy precious metals. Second, treasuries will probably rally as investors seek safety. The 10-year yield could decline. And third, this is the crucial one, crude oil could spike hard. If Iranian tensions escalate, oil supply could tighten, and that would be disinflationary in a weird way. Stagflation fears would rise, and that's bad for equities, bad for growth stocks, and potentially bad for your portfolio if you're not hedged. But here's the thing nobody wants to admit. Geopolitical risk is priced in and out of markets faster than you can blink. Monday, this might be old news. Or Tuesday, Iran could make another statement and we could see another 3% sell-off. The Fed can't control this. The money printer can't fix uranium enrichment. All they can do is sit back and watch risk premiums fluctuate. And that's actually good for gold owners and bad for people holding cash in savings accounts earning 4%, while real inflation runs hotter. So what do? First, check your portfolio. Are you overexposed to risk assets? Are you holding enough defensive positions? Second, understand that volatility creates opportunity. When the market sells indiscriminately, good companies get cheaper. Third, don't panic. Geopolitical scares usually resolve faster than you think. And fourth, remember that your long-term plan doesn't change because of daily headlines. The Dow, S&P 500, and Nasdaq all fell today. Semiconductor and AI stocks held up. Fintech crushed it. Healthcare rallied. Precious metals are bid. And geopolitical risk premiums are elevated. That's your market in a nutshell. That's what happened. That's what it means. And that's what smart money's thinking about right now. Watch this space. Because if Iran stays in the headlines, we could see more volatility ahead. And volatility is where real traders make or lose money. Thanks for watching TechMeHome, MarketPhase Daily News. If you found this breakdown helpful, smash that subscribe button. Turn on notifications so you don't miss tomorrow's market breakdown. And remember, none of this is financial advice. This is purely for entertainment and educational purposes. Always do your own research before making any investment decisions. We're just here to help you understand what the market is actually saying, not what the news is telling you to think. See you tomorrow. Stay sharp.